Welcome guys to Perfect Opinion, and on this video I want to talk about the Indian rupee, what's going on with it right now, and why the Indian rupee is crashing, the future of Indian rupee. So yeah, I'll get into all the nitty-bitty details. So yeah, first thing first, the Indian rupee is crashing for those of you who don't know. And it's now, I think it went to a record low yesterday as well against the dollar in 90.80 rupee per dollar, right? But why? Why the sudden crash, right? Like Indian economy is growing fastest. It's one of the fastest growing major economies in the world right now. The recent GDP growth, the most recent GDP growth was much higher than the forecast. So the economy is growing, and they're beating the forecast on the GDP. Then why is the rupee crashing? Because um, classical economics will tell you that when the GDP grows, the wealth of the country grows, and so the currency of the country becomes stronger. That's what classical economics and history will tell you. That's how a US dollar became such a major currency because the economy grew. Not now, I mean, in the 19th and 20th century, right? The US economy grew. So, yeah, I mean, here's the thing. If you want to understand what's going on with India's rupee, you have to look at something similar. And I think Japan is a good example. So Japan's currency was devaluing as they were growing their GDP in the 90s. So now the question is why? Why now? Right? Well, the short answer is because investors are pulling money out of the Indian stock exchange. Foreign investors invest money in the Indian stock exchange using dollars. They purchase rupees and then they use those rupees to purchase shares. But when they sell those shares and they convert those shares into rupees, and then if they're trying to take that money out of India, they have to convert back into US dollar. So that puts a huge downward pressure on the rupee, on the US dollar and rupee exchange rate, right? So this year, investors have net taken out $18 billion from the Indian stock exchange. That's a net. So it's a net negative, first of all. But again, the question is why? Why are investors if India is such a fast growing economy, why are investors pulling money out of the Indian economy? And the short answer is this is where the Indian economy varies from Japan. Because people say China is a communist country, for example, but China is a hybrid, okay? They have 100% capitalism based free economic zones and all that in China, okay? And then they have some communistic structures, infrastructures, system in place, foundational system in place, right? So all that is there, right? And now China also devalued their currency, right? And they were growing, and their GDP grew, their wealth grew, but they also devalued their currency. Now, here's the thing. Devaluing your currency to grow your GDP is nothing new. People have been doing it forever. What is new is the length, the extent to which people are doing it nowadays, the countries, I mean. So, for example, India, if you look at India's government spending, it's drastically increased from last year. Okay, and most of the growth is boosted by the bureaucratic spending. Over half, I think, of the GDP growth this year came from bureaucratic spending. So you have to ask yourself, is that sustainable? Right? You're printing money to fund the government, which is then funding the GDP growth. That is not a recipe for success. China was different in the sense that, yes, they were printing money to fund the government, but the growth or the majority of the GDP growth did not come from the government. It came from the private sector. So that's where India and China differs significantly. And in terms of Japan, it's a US similar to US capitalism market, private market. So even if they print the money to fund the government, it doesn't matter as long as the GDP growth is coming from the private market. So yeah, I'm not surprised the foreign investors are pulling money out of the Indian stock market, and now they're taking money into other Southeast Asian countries like Bangladesh, Taiwan, and you have others as well, right? South Korea. But the thing is, foreign investors, you have to understand, they do a lot of due diligence before they invest money into a country. And they continue to do that due diligence when they have that money in a foreign country, when they have money invested in a foreign country. And so the idea here is pretty simple. If I, for example, let's say I'm a foreign investor, invest in the Indian stock market. Okay, let's say I bought an Indian company share for 20 rupees. Okay, fine. And let's say the company grew by 10% last year. Okay, so let's say the company's share price grew by 10% last year. Cool. So what happens now? So 20 rupee, I buy the share price, grew by 10%, so that's 22 rupee now. And yeah, the question is what's next, right? And what is next is that you have a 10% growth in your company's share price. Okay, that's the basics. And now let's look at the rupee, the currency. So when you're printing money, the currency is crashing against the US dollar. Okay, this is getting complicated, so I'll keep it simple. The more long story short, your target is if you're investing in a foreign country like India as a foreign investor, yes, your first you have to measure a few KPIs, a few indicators. One is how much your company share price is growing. Second is how much the Indian rupee is falling or rising against the dollar. Does that make sense? Because let's say the Indian rupee is at 50 rupee per dollar. Okay, I buy some Indian shares at 20 rupee or whatever. And now the Indian rupee is at 100 bucks, 100 rupee per dollar. Let's just say hypothetically speaking. Okay, cool. So even though the company share price grew by 10% or whatever, but in order to take that money out of the country, I have to convert it and do a transaction cost loss of more 50% because the rupee 50 to 100, that's a 50% difference from what I did convert when I converted the dollar into rupee, if that makes sense. So that is why investors are pulling money out. That's the short answer. And also because India's government Modi is becoming more aggressive, nationalistic. He wants to fight wars to stir up popularity. He's not doing very well in the polls. So he wants to bring back Hindu nationalism. The easiest way to do is to fight wars with smaller neighbors like Pakistan and Bangladesh and to show Indian nationalistic Hindu patriotism or whatever. But yeah, so that's that, right? And so any third type of it doesn't matter if you're fighting Pakistan or Bangladesh. Any type of military action will require significant boost to military spending. And Modi understands that, and the foreign investors in India understands that. So that's why they're taking the money out, and I don't blame them. Honestly, I don't blame them at all. In terms of the future, what does the future look like? Look, India has a lot of talent, but the system, the corruptive system, the bureaucratic system that was, you have to understand the corruption and bureaucracy in Southeast Asian countries like India, Pakistan, Bangladesh. This was started by the Mughals, and then the British formalized it, turned it into official, informal ways to deal with locals by bribing officials and all that, right? So there is that, right? And so the British formalized it, and that has stuck through ever since then. And so that is the fundamental issue with countries like India, Pakistan. Bangladesh is doing a lot of reforms right now, so I wouldn't put Bangladesh in that list right now. But yeah, that is the fundamental issue. Crony capitalism, bureaucratic BS. I'm not gonna say the whole word, but these are the two main problems with India. They have huge talent, but the talent doesn't want to stay in India because they understand this. They understand that India is not a country for the middle class. It's a country for the poor and the rich. Okay? And if you're looking for a country that's focused on the poor and the rich, and the middle class is just obsessed with leaving the country and going abroad, then you don't care if you devalue the currency and reduce the livelihood, living standard of the poor and the middle class. When you devalue a currency, the rich don't get hit much unless they have a lot of cash. The people who get hit are the people who hold the most cash, and those are the poor and the middle class. The rich hold assets. So a country like India, where the wealth inequality is so large, you have to ask yourself, what do you want, right? Like, does it really matter if I increase the wealth inequality even further? I think that's the question Modi asked himself, and he said, no, it doesn't matter. Yeah, printing the money will make the middle class, whatever left in India, will much poorer and want them to leave the country even more. But that's a benefit for Modi. By pushing the middle class abroad, he can bring those dollars, more dollars back into India. So it is a net benefit for Modi to devalue the currency, force the middle class to go abroad, only stay with the crony oligarchs, the rich, and then you can use them to dominate the poor. Because if there's no strong middle class, there is no strong democracy. You have to understand why democracy has died in a lot of Western countries. It's because they lost their middle class. In order to have a strong democracy, you need two things. You need a large number of people supporting democracy and rule of law, and you need a large number of people with adequate living standard and income and savings. If you don't have money in the bank, you can't talk about politics. You can't do, you don't care about who's gonna win the election. You just care about how to make money. It's only when you start having some discretionary savings that you talk about who's doing politics, sitting, in the living room talking to your family, watching the TV. But those kind of privileges are for the middle class and the rich. Without the middle class, or without a functioning middle class, you don't have a democracy. The rich is a very small group. They can't represent the democracy of a country. And so I think India is going that route. They're following the Western pattern. And this, I've talked about this before. India is widely different from China, Russia, and other Southeast Asian countries that are trying to be independent. India talks a big game, but deep inside India's liberal values, their fundamental values, the way they go about doing international trade, business, and all that, it's all Western aligned. You have to understand, none of India's neighbors like them. Okay, India's in the like outside, in front of everyone, they don't talk about it, obviously. But none of India's neighbors actually like India. Now, people might say the same thing about China, but China is much more Eastern civilization aligned than India is. And the reason is because the current Indian government system was created by the British. And they haven't really done much reform on what was created by the British or the British descendant or British Indian mix people in the 1950s and 60s, right? And yeah, so you have to understand why India is going this route. Now, what does the future hold for the Indian rupee? I mean, only time will tell, but I think, yeah, you're gonna see a much big crash because it's a slippery slope. Once investors start pulling out money from your stock market, especially foreign investors, then other foreign investors look at that, they pull out money from the stock market, and then other local investors look at that, and then they start realigning their portfolios to more bond and other stuff and less to stocks. So it's a cascading effect, we call it in trade. It's a cascading effect. It's a slippery slope. And if it is not careful, I wouldn't be surprised if the Indian rupee crashes even further. Because, okay, so the Pakistan rupee, I think right now it's at 200, 230 Pakistani real or rupee, whatever, to the dollar. Indian rupee right now is at 91, 90.80. Bangladesh's taka is around 120, 21, 22. And this is where things get interesting. So recently, the IMF visited Bangladesh and they were kind of insisting on the Bangladesh bank current governor to devalue taka against the dollar, right? Basically, devalue the taka. But the government hesitated, like the government pushed back, he resisted. And the Bangladesh bank has been recently buying back dollars because they want to keep the taka strong because they know what the game is. They know the end game is the same. If they devalue the taka against the dollar, their country, Bangladesh, will have a bigger foreign influence, just like Pakistan, just like Sri Lanka and others. Okay? And it's pretty obvious, right? When you devalue your currency against the dollar, the assets in your country's currency. So let's say if Bangladesh devalues taka, okay, against the dollar, then the assets in Bangladesh are now all of a sudden cheaper for foreign investors holding US dollars. That makes sense. So that will bring in more foreign investment. And that's probably what India is aiming for. But you're doing that by risking, so like I mentioned, so many other factors. You're risking other things, and you're risking the foreign hand in your country's political and local influence, like the foreign influence in your country's local matters, right? When you have a lot of foreigners invest in your country, especially if they're from Europe or USA, those USA or and European countries will intervene to protect their wealth, their investment. That's always how it works. And Bangladesh understands that, and that's why they're hesitating and they're resisting devaluing the taka, because that means more influence. Bangladesh is a small country, that means more influence, right? For foreigners in Bangladesh. And so it is a tricky, like it's a fine balancing act, to say mildly, right? But so I just want to end by saying this. In the future, I think rupee will reach an inflection point. And you have to understand, India is probably the only Southeast Asian country that still has strategic cooperative relationships with most Western countries. Okay? I mean, Philippines is another, but Philippines is a corrupt country. That's a different issue. But, and Philippines is not in Southeast Asia, it's in the Oceania, Australia, close to Australia and all that. But yeah, you look at the rest of Asia, there's not much influence of Western countries. India is the only one where there's so much influence of Western countries. So yeah, I'm looking forward to see how the future holds for the Indian rupee. But one thing is for certain, the Indian middle class is not gonna survive India for very long. So yeah, that's it for this one. I'll talk to you guys again in another video. Yeah, until then, a peace.